When you hear the words stock market, you probably picture this: wealthy insiders shouting over each other in a chaotic room, frantic to place bets. Many keep cash tucked away in a safe, but hiding money doesn't protect it. Uninvested cash loses strength. Think about the price of groceries 10 years ago versus today. Because things get more expensive, a $10 bill buys less every single year. Staying out of the market feels safe in the short term, but doing nothing is the biggest long-term threat to your financial future. The modern stock market is really just a digital supermarket. You are shopping for tiny pieces of the companies you already shop at, use, and watch every day. Imagine your favorite local bakery makes a profit every month, and the owner lets you pay a few dollars to get a 1% cut of those profits forever. Buying a stock works exactly the same way, just on a global scale. When you tap Buy on your phone, you are becoming a documented, legal co-owner of a real business. Every dollar you invest represents a permanent stake in a machine designed to generate real money. Let's look at how powerful this can be, using just $10 a week, roughly the cost of 2 cups of coffee. If you put that $10 into a piggy bank every week, at the end of 1 year, you will have exactly $520. It never grows on its own. Now consider what happens if you channel that exact same $10 weekly habit into the stock market instead. This chart shows the difference. On the left, your cash savings stack up in a straight, flat line. But on the right, your money begins to multiply itself because those companies are growing and sharing their profits with you. As the years roll on, the invested side pulls away completely. The profits start making their own profits, which pulls the growth line well past your flat savings. You do not need thousands of dollars to get this engine running. You just need a few spare dollars and patience to let time do the heavy lifting. Getting started takes just 4 simple steps. Step 1 is opening an investment account, often called a brokerage account. It takes about 5 minutes online and operates exactly like a standard bank account. Step 2 is adding your initial funds. Starting with just $10 is a great way to begin. Step 3 is choosing what to buy. Beginners often pick an index fund, which is like a prepackaged combo meal. You buy a single fund containing tiny pieces of hundreds of top companies bundled together. Step 4 is putting the whole system on autopilot. Set up your account to automatically pull that $10 from your bank every week, so you don't even have to think about it. That is the entire process. Setting up your personal wealth-building engine is practically effortless, and you don't need a finance degree to manage it. While the mechanics are simple, human emotions can still cause people to crash their portfolios. Avoid the trap of blind investing. Putting money into a company when you have no idea what they actually sell or how they make a profit is a quick way to lose it. Ignore the hot tips from the internet or well-meaning friends. Success comes from sticking to your own steady plan. Most importantly, don't panic. If the market has a bad week and prices drop temporarily, selling out of fear turns a temporary dip into a permanent loss. The market itself is remarkably resilient over time. The real danger comes from reacting to short-term noise. So keep these 3 rules in mind. First, start small, think in decades rather than days, and stay consistent with your deposits. Treat the market as a slow, reliable tool for building wealth over time. Take 15 minutes this weekend to open your account and invest your very first $10. Investing is the way to become rich, and anyone with $10 can start today.